Filing small business taxes is an important process for every business, although it's enjoyable to very few. In fact, some flat out dread it. The problem is that some business owners think of taxes only in the weeks leading up to the April 15th deadline. But there's a lot more to consider. Let's talk about 6 common mistakes that small business owners make so you can avoid making them in your business. Stay with me, and you can feel more confident when you file your taxes. First mistake, not filing or paying taxes on time. If you miss the tax filing deadline, your business will be assessed a 5% per month penalty by the IRS that will continue to increase until the return is filed. If you don't pay your taxes, the IRS will hit you with a 6% interest plus a late payment penalty of 0.5% each month after the April 15th deadline. It's obvious why you need to make sure that you file your taxes and make your payment on time. The penalties are severe, and ignoring them will not make them go away, and the problem just keeps getting worse over time. Worst case scenario, you can request a filing extension to give you a little more time and avoid the penalties. The IRS site can help you figure out which form you need to submit for a tax filing extension. Even if you filed your tax filing extension, you would still need to pay your taxes owed by the original due date. If you don't have the money, you need to find some alternative ways to work things out. Second mistake is not paying estimated tax during the year. According to the IRS, if you are filing as a sole proprietor, partner, S corporation, shareholder, and/or a self-employed individual, you generally have to make estimated tax payments if you expect to owe $1,000 or more when you file your return. If you're filing as a corporation, you generally have to make estimated tax payments for your corporation if you expect the corporation to owe tax of $500 or more. Your bookkeeper can advise you on the estimated tax payments you should be submitting. You can also figure out how much you should pay in estimated taxes with the Form 1040 ES worksheet. Third, not applying the right business deductions. If you don't want to pay more in taxes than you actually owe, then business deductions are the way to do it. There are so many deductions that your business may qualify for, including office furniture and supplies, advertising, licenses, equipment, startup expenses, and more. Contact me and I'll send you a list of potential business tax deductions to see where you can cut back on what you owe or consult with your tax professional. Next is not tracking expenses accurately. It is difficult to take any tax deduction if you don't have a record of incurring those expenses. This means you have to be very detailed and meticulous with your business records, including saving receipts, keeping a travel log for mileage, and tracking and categorizing expenses. One of the best ways to do this is by working with a qualified bookkeeper all year long. Not only can a small business bookkeeper advise you on what could be deductible and how to track those expenses properly, but a bookkeeper can also streamline the tax process by managing your books every month, then compiling your tax information for an accountant or tax professional to use when it comes time to actually file your taxes. Next is not separating business and personal expenses. If you muddy the financial waters by intermingling your personal and business expenses, you could very possibly be creating a big mess that'll have to be cleaned up when tax time rolls around. Separate your business and personal expenses by maintaining and using separate bank and credit card accounts, keeping receipts separate, and paying yourself a salary instead of drawing directly from your business accounts. This is another area where a bookkeeper can actually advise you on how best to keep expenses separate. Then there's not working with a tax professional. It is very tempting to go the less expensive route and do your business taxes yourself with business tax software. While that might work for sole proprietorships with an uncomplicated setup, I don't believe it's a good idea for more complex businesses. Not only do you run the risk of misfiling your return, but you may miss a few major deductions simply because you don't know that you qualify for them. When choosing a tax professional, make sure he or she is certified and has the experience in your industry as well as with tax planning. You may also want to get references or go with a CPA or enrolled agent that has been referred to you by a colleague. The act of filing taxes may happen just once per year, but the tax process has required tasks and payments and considerations that have implications for the entire year long. Avoiding the mistakes that we've listed here will help make the tax filing process a whole lot more painless for you. Take the time to make sure you aren't making costly and stressful mistakes when handling your small business taxes. If you need a referral to a qualified, excellent tax professional who can make your process more simple and help you to be confident that you are paying as little taxes as possible, just contact me. Take a moment to subscribe to the channel, and if this has been helpful to you, smash that like button for me as well. I'm David Weiner, the CEO of Cash Flow Strategies. After all, it's your money. Keep more of it.